right, well, welcome back, everybody. This is episode number 3 of the Pesce Lanzillotta Team Podcast. Today we have with us a good friend. He's worked on Wall Street for the last 10 years. His name is Sean Ash. We wanted to bring him in because there's obviously a lot of uncertainty in the economy right now, as you can see just based on the stock market the last couple of months, the last week especially. So we thought it might be a good idea to get someone in who has a little bit more of a financial background than we do, and kind of hear his thoughts and what he has to say, and see if we can get some information out there.
Yeah, first thing I want to start out with, you're looking chiseled. Tell me about this keto diet that you're on. What are you doing, and how has it changed how you feel?
Keto, baby. I love it. So I started doing it about a year ago, and when I first started doing it, it was kind of just...
what is it? I mean, everyone talks about it, but what is it?
So the whole hypothesis is this, is that your body can operate off of 2 sources of energy, like a hybrid car, okay? Mm-hmm. There's carbohydrates and there's fats. The idea behind it is that carbohydrates, well, this is also, in direct opposition to what everyone's been taught for the past several decades, right? Everyone always was taught that fat makes you fat, right? But the hypothesis here is that it's actually carbohydrates and overconsumption of carbohydrates, which ends up building fat. So the idea is that if you deplete your glycogen stores, your sugar, right, and you keep that extremely low, your body can no longer burn carbohydrates or sugar for energy. So to provide energy to your body, you start pulling fat stores from your body, right, to then convert that into ketone bodies, and that's what your body uses for energy.
So previously to you getting on this diet and eating healthy, and I want to know what a day in that looks like, because I tried this, and it was not. There was nothing scientific about it. It was basically Ron's keto diet. So,
hold on. So what did you do exactly?
So I would go to the deli and I would go, let me get some bacon, let me get some eggs, and some sausage patties on a plate. I would get that. I would eat it. Is that keto, or? Yeah,
for the most part, that's keto, because the whole idea is that you want to keep your carbohydrate intake under 50 grams per day. Now, when you're first getting into it, you want to keep it under 20 grams a day, which is pretty tough for the first several weeks. And then,
so what does that look like in regards to what you like? Is is that a potato? Or is it?
No, I would assume that a potato has more than 20. I guess depending on size and everything else, but potatoes are pretty high in carbohydrates.
Okay,
sugar. So you end up, when you first start getting into it, you start reading a lot of labels on food that you normally eat. And then when you realize how much sugar is in all the foods that we eat, right, when you're reading these labels, you go, right, oh, wow. And so then you just end up bypassing a lot of that and just eating natural foods, some chicken, some bacon, some steak. Avocados are great because they're high in fat. So you do want to have a higher fat intake, because that's what you're going to be using for energy. And the other thing about eating high fat foods is that they satiate you, so you eat less,
right,
which is important as well. So it's kind of tricky when you first start doing it, because again, you don't realize how much sugar is in all the foods that we eat. But what I've noticed is that when I first started doing it, and again, this is all anecdotal data, right? This is just me. May work for other people, it may not work for other people. I think everyone should do what works for them. But for me, I love it. And now when I eat meals that are higher in carbohydrates, I actually feel terrible afterwards.
Puts you to sleep.
So I stay on this ketogenic diet because I just feel better. I feel better, and I've lost a lot of weight, and overall, I think my health is a lot better. I mean, I used to have terrible acid reflux. I used to take Zantac literally every day.
Yeah.
Multiple times a day. That went away. I don't snore anymore. It's just all these other benefits. My knees used to ache. My knees don't ache anymore.
Inflammation's gone.
Yeah.
But I have a buddy who went to the Tony Robbins Business Mastery class, which is something I actually really want to do at some point in my life. And supposedly Tony started talking about it. And he's talking about releasing ketones and optimizing your body and your life to be able to perform well in business, and just very interesting stuff. So now you're more energized. Like walk me through a day of what you eat, what you put in your body, and how that fuels you versus what was previously going on.
Yeah. So, one of the things that I've been doing as well is I don't eat breakfast anymore. So I do this kind of like intermittent fast type situation. So I don't eat breakfast. I have my coffee, and then my first meal's usually around noon, 1 p.m.
How do you have your coffee? Black?
No, heavy cream.
See, I'm told that dairy is terrible.
So milk is comprised of lactose and fat, right? Mm-hmm. Lactose is a sugar, like glucose.
Right.
So what's interesting is that, how for years everyone said, oh, you're trying to lose weight, drink skim milk. Skim milk's better.
Higher in
got
sugar.
Less fat. It's higher in sugar. Exactly. If you look at the label on skim milk, more carbohydrates than whole milk. So I don't even do whole milk. I do heavy cream. And depending on who you ask, people will say, well, you want to stay away from dairy because of the sugar. But I like heavy cream in my coffee. It works for me. And that's why, again, it doesn't affect how I feel. So I do it.
Do you supplement? Are you taking like a Centrum Men's, one a day kind of thing?
No, I don't really take vitamins. No. And again, not saying you shouldn't. I just don't.
So you have the coffee and then intermittent fasting, then what?
So I'll have my coffee, intermittent fast, and then for lunch I'll have a protein, usually vegetables, and obviously vegetables have carbohydrates in them, but they're very low,
right?
And they're more complex. It's not like a simple sugar like in bread or what have you. Mm-hmm. Try to have an avocado in there. And then dinner time, again, another, protein, piece of steak, some avocado, love kimchi.
What do you think your total caloric intake is on top of being keto?
I don't know. I don't really count calories. I eat enough that I feel good. Some days I eat less just because I'm so busy. I mean, this past week, and again, this probably isn't good, but this past week I've had lunch maybe once. So I didn't eat breakfast, didn't eat lunch, and then I'd eat dinner. Yeah. But I have a good, nice big dinner. This past week is rare. It's just been busy. So normally it's, again, moderate protein. The mistake that a lot of people do when they're first going on like a ketogenic diet, and it's usually people who exercise a lot or lift weights a lot, is that they go too heavy on the protein. So if you have excess protein, it prevents you from getting in a ketogenic state. The idea is you have to get in a ketogenic state and have your glycogen stores depleted.
How long does that take to happen?
I think everyone's a little different. For me, I think when I first started doing it, probably took a couple of weeks, but I'm guessing because you don't really know unless you test. So they sell these urinalysis strips, these pee strips, and that'll tell you whether or not you're in ketosis. And I didn't buy those until probably like a month or two after I started doing it, just to actually know whether or not I was in a ketogenic state, because I didn't see any weight loss immediately, and I don't think I saw any weight loss for a good 3 months. But then after 3 months, fat just melted off my body. I weighed 200. No, maybe I weighed like 198, right? So, first 3 months, there was no shift. And then, now I'm down to like 171 pounds.
Wow. So you feel completely optimized. You don't get tired. You feel like your mind works a little quicker.
Yeah, I feel like I have a lot, I don't know about quicker, but just better overall mental clarity. I feel like now when I eat carbohydrates, it's like this brain fog is the best way to describe it. I remember, after eating lunch, I'm sure a lot of people can relate to this. You have your lunch and then you need that coffee afterwards because you're a little tired after lunch. Mm-hmm. And I would always have that. Now I eat lunch because I'm eating differently. I don't have any of that fatigue after lunch. I mean, I'm still having my coffee because I love coffee, but.
How long does it take you to fall off the wagon? Like one big meal of carbohydrates and that's it, or it's pretty hard?
Yeah, I mean, so it depends what you mean by fall off the wagon, but
like I guess get your body out of ketosis.
Yeah, if you have sugar, over a certain number of grams in one meal, you're absolutely.
And is it a couple weeks to get back in?
No, at least my experience with it is that the longer I'm in ketosis, the quicker my body bounces back into ketosis. So if I have one meal, I can get back in pretty quickly within a day or so. And it could be even faster depending on whether or not you're exercising. So for example, if I have a meal that's higher in carbohydrates or sugar and I end up going to the gym, you're going to utilize that sugar in your exercise. So you can be back in ketosis
almost immediately.
Yeah.
Once you burn that out.
Exactly.
Right. So my problem was when I tried it, I mean, first of all, when I start trying to eat in a very specific way, it's like a big chore for me. And the other part of it is I have a hard time getting creative with my food. My whole life, eating has been like an event. You wake up in the morning, I'm excited for that.
Yeah,
for that trip to the deli. I just, from when I was a kid, loved the trip to the deli. Lunch, it was another event. It was something that I wanted to sit down, eat that food, whatever. How do you keep the creativity in your food, enjoy it, and still limit yourself to what you have to be limited to?
Yeah, so it's tricky. It's tricky when you really love food, because like you, I love eating good food, and especially, listen, we're in New York. There's great food everywhere.
Pizza.
So many options.
By the way, I hate Dave Portnoy. Love Dave Portnoy, but I hate him. The guy eats a pizza every day, and he looks good. If I did one bite everybody knows the rules, and ate a pizza every day, I'd be 400 pounds overnight.
I think people just metabolize it differently. But I mean, also too, listen, I was close to 200 pounds, but I'm 6 foot. I wasn't, you've known me my whole life. I was never really fat,
No. Lean, always lean. Relatively
lean. I'm a lot leaner now than I was. But for me, the motivation was that I kind of noticed a little bit of a gut, and I wanted to get rid of that. I didn't like 30. That. Yeah, I was getting a little older. I wanted to. I never had
a gut.
So when it started to show up, I'm like, oh, wait a minute, I gotta do something here. But the overall feeling that I have when I eat this way is so much better to how I feel when I'm eating carbohydrates. That I don't want to eat a pizza every day. I used to have a hard time kind of, managing cravings for a while when I first started doing it, because, who doesn't like nice big bowl of pasta or pizza?
Well, you're addicted to all that stuff.
Yeah, well, that's the thing. You get this sugar addiction, you get this carbohydrate addiction, and it doesn't really leave you satiated. So you can eat a bowl of pasta, and an hour later you're hungry again.
Yep.
So you want more of it. When's the last time you had a couple potato chips? That's the hardest thing to do.
You gotta have the whole bag.
In the bag, So it's one of those things that's very hard to do when you're first starting out. But once you notice the physical difference in how you feel, it's hard to go back to eating the old way. So, like I have cheat meals, and I'll eat high carb meals. I made rigatoni, spicy rigatoni vodka the other night.
That is so not ketogenic, though.
It's so not ketogenic. It was delicious. I enjoyed it, but that was it. And I go back to eating.
So if you cheat one meal or one day a week, it's not the end of the world.
No, not at all.
And that's what makes it a sustainable diet, correct?
Yeah. Plus, you're also, keep in mind, you're eating foods that satiate you because they're higher in fats, and you want to obviously eat healthy fats. You don't want to eat, hydrogenated oils and things like that. Those are
nothing deep fried, nothing.
Yeah,
like a chicken cutlet fried in olive oil. Is that bad?
So olive oil is great. Olive oil is great. Now there's some people say that when you heat olive oil to a certain temperature, it's no longer good for you, and there's probably truth about that, but I'm not a scientist, so I can't testify to any of that. But you feel so much better that you don't feel the need to go back to eating that old way consistently. I will have probably a high carb meal once a week, and you just get back into ketosis the next day.
Well, when this thing's over, you got to write down some meals for me. Keep me creative.
I'll give you a good example. The other week, I'd been eating so clean and felt so good. I'm like, you know what? I'm going to reward myself. And a Chick-fil-A opened near the office. All right.
I don't like Chick-fil-A. Not a big fan.
That's weird.
I don't think you're doing
Taco Bell.
Yeah. I don't think you're
Maybe I'm not doing it right. I don't know.
What'd you get?
I went there and I got chicken fingers, and they said when I pulled up to the window, it was the guy out on 347 out in Suffolk County, the one out there. And I got to the window. The guy's like, "Oh, we got these sauces. You want these sauces?" Right? I guess that's a thing they do. I was like, "All right, give me all the sauces. I'll try all the sauces." And I lined up all the sauces on my front dashboard. And I'm sitting there with chicken fingers, just dipping the chicken fingers in the sauces and eating it. And I'm like, none of these sauces are doing it.
I love the
me.
Chick-fil-A sauce. It's so good.
Yeah,
you got to get the spicy chicken sandwich.
Yeah,
that's the go-to. And I got a spicy chicken sandwich. I got the fries, and I got a strawberry shake, and
You went all out.
I went all out. I got back to my desk, I'm scarfing this down. I eat way too fast in general. That's how I've always been. I don't know, maybe time thing, but I scarf everything down. I'm like, this is so good as I'm eating it.
Mm-hmm. Immediately after. 20
minutes later, I felt so sick and like tired and just full of regret. I'm like, that's why I don't eat that way anymore. Because all that sugar in the shake and it just
By the way,
didn't sit well with me.
Mike is the king of fast food. I've seen him spend like $125 at the drive-thru on an order at like 3:30, 4 o'clock in the morning. And,
yeah, that's the key word, 3:30, 4 o'clock in the morning.
And actually eat it.
So your experience as a ketogenic dieter is interesting. But let's cut to why you're here today. Your experiences on Wall Street, and I guess just to start off. I mean, what do you think about where the economy's at right now and where it's heading?
How'd you get to where you are in your career right now? What do you do? Walk us through from graduation from college till now.
Wow, that was a long time ago, but all right. I'll give you the 30,000-foot overview.
Yes.
Went to college, studied finance. While I was studying finance in college, I had a job as a consumer lending and business banking consultant at a bank that was ultimately bought out after the 2008 credit crisis. Mm-hmm. But while I was working there, I met an individual who ended up recruiting me to a firm on Wall Street, where I started in wealth management. I started doing this in 2008 as the market was melting down, and it was an interesting experience because I stepping into that environment, you learn a lot. It's crash course, no pun intended. And
looking back, you're probably happy you started at that time.
Of course, right? Yeah. You learn a lot, and then there was also obviously a lot of good entry points for stocks that went on sale. But I started in June 2008, so we weren't at the bottom yet. So we were we were taking advantage of the decline in the overall market by shorting some equities, making money by them going down
as it was going down.
And then buying equities that we thought were cheap and would be the first to rally. So I did that for a couple years, but honestly, I didn't enjoy it.
What didn't you like about it?
It didn't feel very meaningful, honestly. Mm-hmm. It was one of those things where I'm buying and selling these pieces of paper electronically. It's not even paper, you're clicking buttons. You're trying to outsmart the overall market. And, how do you ever become an expert in Apple and Ford?
Exactly.
We're all privy. These are public companies. We're all privy to the same information at the same time that it comes out. And so the idea is that you're just making decisions based upon what you think is going to happen in the future. So I didn't feel like the work was extremely meaningful because someone could just buy the overall market in an ETF and kind of just, you're outsmarting the overall market by buying individual equities is a very difficult task that, some of the best hedge funds in the world have a very hard time doing. So after a couple of years,
is that why it's gone mostly digital too? I mean, like with the E-Trades and the TD Americas and all that, where I could buy stock from my cell phone now, an app. Yeah. I mean, are there as many brokers on the floor today as there was 15 years ago, 20 years ago? Or what is a normal, if you walked into a Wall Street brokerage, do you still see that, what you saw in the movies in like Wall Street where there's a bunch of guys running around with tickets screaming at each other?
Yeah, it doesn't look quite like that. That's good for theatrics.
Yeah.
But I mean, I can't attest to overall numbers. I don't know those figures, 20 years versus today, but I think that people have more options to do things digitally themselves at a lower cost than having to pick up the phone and do orders. Think about in the 80s.
It was all manual.
Yeah, you in order to buy stock, you had to have a broker, So there's definitely been a big...
Very similar to real estate, by the way. In a lot of ways, things are changing. They've gone digital. That digital element has kind of... it's taken a certain element away from the agent. We have a different job now, which is why there's a lot of people that still work on Wall Street. The job has changed, right? So for us, you have a lot of these listings online that everybody has access to, but there's a lot of nuances that a lot of people just don't understand about houses and the process. And, we see deals go sideways all the time. And someone's got to keep it together, and someone's got to have seen 100 deals through or thousands of deals through in order to bring it across the goal line. And I mean, that's where we come in. That's kind of our job on top of the marketing and all that other good stuff. But very similar in regards to, one industry to the next and how technology has impacted it.
Absolutely. Technology has impacted, every industry out there in the way people do business. I think it's streamlined a lot of things. It's made a lot of things a lot more efficient. And I still think there's a lot of change to come too.
Oh yeah.
So, after a couple of years, just not feeling a lot of I wanted more. Basically the end result is I wanted more out of what I was doing.
Okay.
On a daily basis. So I took a couple days off and I just did a little
soul searching.
A little soul searching. I was at the beach. I was trying to think about, what I really wanted out of life and work. I wanted to, I wanted my work to have an impact, right? I wanted to just have more meaning in general, because I felt there were a lot of people doing what I was doing, and I wanted more out of it. So I didn't really get very far on those couple of days off. It was just a lot of just thinking and, hanging out on the beach. And then so I ended up back at work, and serendipitously I met an individual who's my current business partner. He had worked at the firm that I was at, had left, and then had come back. He left to raise money around some of the big VCs out there, and then he had come back to the firm, and I had heard about him. And so we bumped into each other basically at a copy machine. So I introduced myself, and we chatted for a couple minutes, and then a couple days later, I'm on the phone with one of my clients, and he walks in, sits down, and I end my call, and then he just explained kind of the vision that he had and recruited me to work within his group. And basically the idea was that he was going to build a network of well-known entrepreneurs in the healthcare space.
Okay.
He had already had one specific entrepreneur who's had a tremendous amount of success in healthcare, founded over $100 billion worth of healthcare companies that he knew since 1991. And he was going to help kind of serve on the boards of directors of these early companies. Our group would fund those companies, raise capital for them pre-IPO, so private companies.
Gotcha.
More of a venture capital type stance, and build these companies up over time, and companies that would be developing new drugs and therapies and vaccines. And so to me, that was very interesting, because to me that seemed a lot more meaningful from the standpoint that you're creating new therapies to help people.
That's cool.
Improve their quality of living, save lives. You're creating these companies, helping them create jobs, and it's just, that seemed a lot more exciting, a lot more meaningful, a lot more interesting, mentally stimulating, because you have to learn little nuances of the science around each company. And so I said to myself, well, that was timely. So yeah. So I said, yeah, let's do it. And the group has grown a lot since then. And it's been fun. It's been a lot of fun.
Awesome. So company comes to you, they've got, let's say, a drug or something, right, that is going to revolutionize something in healthcare. Are they trying to get funding to move along the FDA process, or are they trying to get funding to go public? And is there a difference? And you know what I mean? Yeah.
So that's a good question. So it's typically to move through the clinical process, right?
Okay.
To conduct studies, to move through the various phases of the FDA clinical process. And in terms of going public, usually these companies, once you get far enough along, that the value of the company increases typically, right? Because the further you are along that process, the closer you are to a potential, fingers crossed, approval, the greater the value of the company. So at that point, as the value grows, you have an opportunity to then either go public or get acquired or what have you.
Why go public? Like Facebook, for instance, right? Why did Mark Zuckerberg relinquish 49% of his company? What does that do for him? Is it a cash injection for you to grow further? Yeah,
so it's easier to raise money for a public company because it offers investors liquidity. Once a company is public, you could trade in and out of it. So it's easier to raise larger tranches of capital for a public company. And also, too, it allows the owners of the company to realize profit from their stake.
Gotcha.
Because either you go public or you get acquired. And Facebook, is one of the biggest companies in the world out there now. So who's going to acquire them? They're their own, big entity.
All right, awesome. Well, so go ahead.
No, nothing. That was it.
So in regards to the markets today, I mean, the past 10 years, I'm just curious about your opinion. The past 10 years since the economic crash and the ride up and the expansion of American debt and where are we now with all this volatility and what does the horizon look like? So
there's certainly a lot of volatility out there right now, and I think that's due to uncertainty. Right there, I think there's a lot of uncertainty, in the marketplace in general, in terms of politics, and where things will head from here. And if there's one thing that the market doesn't really like, it's uncertainty. Mm-hmm. So you have a situation where Trump's cabinet and administration has a revolving door, people in and out, tensions overseas, geopolitical issues, and all that uncertainty affects the overall market.
Gotcha. So if we were to rewind the clock to 2008, 2009, and look at what Barack Obama did when we had the initial crash and how the Federal Reserve responded, I hear a lot of things out there that they've basically just reinflated a bubble with quantitative easing and basically kicked the can down the road that maybe had they let certain companies fail, like an AIG, for instance, which supposedly they insured everybody, right? So if they failed, everybody failed. But from what I understand, if they didn't reinflate that bubble, we would have had basically a complete economic depression. Fast forward 10 years later, what a lot of people think is that they basically kicked the can down the road, blew the bubble up bigger, but it still eventually has to correct itself.
When you say bubble, what do you mean? Do you mean like
meaning
deficit,
the subprime loan issues back in 08, 09 that created the crash, that a lot of those banks were supposed to fail, and that the American government printed a lot of money, injected it into the economy, specifically gave it to those banks, that just reinflated everything, and they pulled interest rates down to zero. Those banks started lending out money. Everyone started making money again. I mean, are we healthy again, I guess, is the question. And where does that take us going forward if we're not?
So I don't know about reinflating everything, but I think the lowering of interest rates and quantitative easing helped stabilize things. I don't see what the upside would have been to letting a lot of major corporations fail.
Agree with that. Agree with that.
And the other thing is that, we do print a lot of money, but one of the things that's unique about our position as a country is that the U.S. dollar is a reserve currency for basically everyone, right? And so we're in the unique position where we could print money and still be okay. Now, the question is,
so when they print money, right? Let's go through that process, right? Because what they're doing is they're issuing bonds, right? Selling them to foreign countries, and
you'd sell them to other
the general public, whomever,
funds, whoever,
right? And then that's them creating money.
Well, technically, yeah. So you also have a situation where the Treasury issues that, and the Reserve will essentially print capital for injection into the economy. And yes, that's via bonds and what have you. So you have a situation where the Treasury will issue bonds, right? But it's also kind of borrowing money from the Reserve that's printing it into creation.
Yeah, they have to work together,
right,
simultaneously. You say issue bonds, sell bonds,
right. Right.
Yeah, so because our debt is denominated, because America is the leading reserve currency, like you stated before, and because all of our debt is denominated in American debt, and because there's always buyers of American debt, meaning issuing bonds and selling them to the public, whether it be foreign or domestic, they can essentially just keep printing. They can keep the printing press on. So they just keep the printing press on when they run into trouble to pay for more debt. But I feel like that has to come to some kind of an end at some point, right?
So it could, it could, but what's going to be the currency that replaces the dollar?
Well, I think that's not. I think the question is at what point are other countries or our own citizens not willing to buy the bonds that they're issuing to sell?
So it really comes down to, I think, what are they going to do instead? What are the alternatives?
I don't know.
Right?
I don't know.
So, for example, the EU created the ECB, European Central Bank, right? Mm-hmm. To kind of, and the euro, obviously, to compete with the dollar, right? It did a few things. It helped facilitate trade between the European nations. A single currency helps trade back and forth, but they also, in my opinion, did so to compete with the dollar, hoping that the euro would be a major reserve currency, and the euro is held by central banks, right? Mm-hmm. But not to the extent that the US dollar is. And I think the EU has also realized that they have a unique situation that's different to the United States, in the sense that you can try to unify Europe, but it's not going to mimic the unification of the United States of America. If
different cultures.
Listen, if Kentucky's slumping and Texas has to pick up the slack, maybe
it's a fellow American.
We're one country, one flag. It's different when you have
more stable.
It's more stable,
and people have something in common. They care about each other, right? So
you would think, right?
Yeah.
Except you wouldn't know that nowadays.
No, you wouldn't.
But you look at the European Union, and Germany's picking up slack for Greece. That creates a lot of issues. A lot of Greeks are employed by the government. That creates another issue. So there's a lot. I think there's a lot more.
It goes back to what you said before. There's a lot more uncertainty, because you don't have different states. But to your point, so the United States, there's different states, but it's one flag, it's one nation.
Same culture. It's tribalism
versus different countries, right? When you have other countries that are having issues amongst each other, there's more uncertainty. So for the euro to become the reserve currency of the world, there has to be confidence,
right,
in it. And there's not. It's hard for there to be more confidence in that than the dollar, when there could be more uncertainty, because you have it's just more complex. You have different countries dealing with each other,
mm-hmm. right,
versus one country, the United States. But I want to go back to, so explain to me because you said right now there's a lot of uncertainty in the economy, but uncertainty is not when they measure the health of an economy, they don't measure it based on confidence or uncertainty. They measure it based on corporate earnings and unemployment rate and all these other, tangible numeric factors. So when you say that the market's not doing well because there's uncertainty in the economy, I agree with that. I get that, but shouldn't it be, if the numbers are pointing in one direction, the economy should be doing well, versus if the numbers are pointing in a different direction, it should be doing poor. So explain that. How could there be uncertainty, but there's still tangible numbers? So is just no one paying attention to the numbers, and no one understands what those numbers mean? Or
I think you bring up a very good and common question, right? And I think the answer to that is the difference between the economy and the market. The economy is based upon those figures that you cited: employment rate, GDP, savings rate, things of that nature. Mm-hmm. The stock market is a different animal. The stock market,
I feel like everybody looks at the stock market. That trumps everything. It's like, oh, the markets are going crazy.
Well, the market is sentiment. The market is investor sentiment. If people feel good about the situation, the market goes up. Mm-hmm. If people are unsure, we see a situation of volatility like we're seeing today.
How much we're talking about technology changing the way every industry does business. How much does that change nowadays with technology, when you have computer algorithms, just making huge, massive trades literally every microsecond? So how much does it matter what an actual person or people are feeling in terms of the market when you have all these computers involved in the trading nowadays?
That's an interesting question.
Yeah, that is a very good question. I think there are a lot of algorithms out there, but also the there's a lot of, hedge funds and large entities that participate in the stock market that are not controlled by algorithms, and the algorithms,
or they control the algorithm.
Right. And algorithms there are a lot of different types of algorithms out there. I'm certainly not an expert on this, but algorithms can also trade a lot based upon, fluctuations in pricing, right? They look for patterns and different levels of volatility and price movement. And so once certain decisions are made, buy, sell, what have you, those algorithms kick in and trade based upon that. Mm-hmm. So it's not as simple as algorithms trading based upon economic data. I still believe the stock market is largely based on sentiment.
So I guess then my question is, so for the average person, right? The average person isn't an expert in the stock market or the economy, probably. They read the paper, they watch the news, they have a general idea of what's going on. How do you differentiate, to the average person, how would you differentiate from what's going on in the markets right now, which, like you said, is a lot of fluctuation and a lot of uncertainty, from what's going on in the economy, which people, it seems to be, just based on the news and reading the paper, right? Just like your average person seems to be, and I don't want to say strong, but in good shape, and even though there might be some type of slowdown, in no immediate danger.
Or is there immediate danger? That's the question.
Trying to think of how that could be answered properly without,
advising one way or the other.
Yeah,
Well, what's your opinion on the economy? Can you give your opinion on the economy right now?
Well,
the overall health or strength of the economy from a financial point of view?
I think the overall numbers in the economy look good, but I also think that one should also keep in mind that everything operates off of debt cycles, like Ronnie and I were talking about earlier. And usually at the top of that economic cycle is when things look
good, best.
Great,
that's when they look the best.
I feel like when things can't get any better, that's when it has to go the other way. The question is are we there? I don't know.
So numerically, all of these, these numeric measures that are quantified and used to measure the economy and how successful it is, you could be in a recession and those numbers look fabulous, correct? And it's usually not until much further down the road or a few months down the road that people realize, wait a second.
You could be heading to one and those numbers can look great.
Well, right. It's like, so if you put things back in the perspective of the market, what the stock market's considered in a recession at what point?
20%.
Yeah. So if you're 5% down, right, you're not in a recession yet, but if it continues 3 months later, it's 20% down.
I think the Dow's 18% down.
Yeah. So then I guess it's like, yeah. So when it was 5% down, were we in a recession and we just didn't know it because we officially hadn't hit the 20% down, or
See, I have a theory, and again, I'm a huge Ray Dalio guy. I live and die by Ray Dalio. I think he's got it figured out, and he's got it broken out simply to the point that the average person can understand it, which is why I understand what's happening, in my opinion. Anyway. You have to pay attention to the flow of credit, right?
Right.
There's $55 trillion flowing through the American economy. 3 of it is actual paper. 52 of it is credit. So how much credit is available, meaning how much money, and what are the interest rates? Is borrowing that money cheap or expensive?
Right.
And if you look at a graph going all the way back to Paul Volcker, in the 80s, when interest rates were at 20%, and they got to 20% because in the 70s we had all those social programs where they had to start printing money, and we had Vietnam, right? And they had to pay for the war, and that's when we went off the gold standard. So once we went off the gold standard, which remind me about not being backed by gold, but rather being backed by oil. It's an interesting conversation that I heard on another podcast that is applicable. But anyway, we went off the gold standard with Nixon, and then the great inflation happened. People, the price of milk and eggs and everything shot through the roof, and people couldn't afford it because incomes didn't support the increase in price on everything. Now, the 80s comes along. In order to control inflation, you have to raise interest rates. And what does that do? That promotes savings. So people put all their money in the banks, right? Leveled everything out. Asset prices fell or came back to normal for that time. Since then, you have Alan Greenspan, Ben Bernanke, Janet Yellen, and now Jerome Powell, right? Those are all your Fed chairmen from then until now. Interest rates have fallen, if you look at a chart, from the 80s at 20 some odd percent at their highest, down to zero. Now, as they fall down to zero, that's why the Dow Jones took off. Right. In 1999, there was a a hedge fund that was trading derivatives and some kind of insurance on derivatives or something like that. Long-term capital management or something like that. It's a famous flash crash. And Alan Greenspan, they were controlling a huge portion of the market. They made the wrong bet. Their derivatives traded incorrectly, and the market fell like a huge percentage in that day because they made the wrong bet. Greenspan pulled the rates down, it took off. So, and what did they do during the 08-09 crash? They lowered rates, they printed money. It just seems to me like it is that simple. More money in the economy means more expensive stuff. It's the wealth effect. People start to feel wealthy, especially when interest rates get pulled down and borrowing money's cheaper and the markets are going up. Everyone feels wealthy. But now that they're tightening, and they're tightening because they need to have some kind of defense against a future crash, right? Right or wrong? I mean, that's why raise rates otherwise?
And that's the thing. And you raise rates to control inflation, but inflation, from what I could gather, hasn't been a major issue.
There isn't I could tell you with houses. Small houses are selling for a lot of money right now. And in our industry, we have heard a lot about affordability issues with housing, that people don't have their down payments, right? That wealth gap is spreading. Mm-hmm. The haves and the have-nots, and the have-nots, which is the majority of the population of America, is having trouble mustering together enough money to get into a home.
I guess first, well, how would you define inflation? Because that just because homes are becoming more expensive doesn't mean it's inflation necessarily.
Not all the time.
Yeah.
So if there's gentrification of a neighborhood, that's one thing. Like a Long Island City, right? Amazon comes, they're going to start, stores are going to start opening up. There's going to be gentrification. They started building. That's different. But in our market on Long Island, it's kind of all a function of money.
Well, you want to look at the cost of everything too. It's not just housing; it's cost of housing, food, everything. And as all those costs increase, and inflation's gone up.
So, what define inflation?
It's basically the simplest way to look at inflation is I would say cost of living. Basically, the more the cost of things increase, the less the value of your dollar relative to that.
It's the devalue of the dollar. So things everything just gets more expensive. A cup of coffee, instead of being, $1.50, becomes $3.50.
So why is inflation a bad thing? Why is inflation a bad thing if it is? It doesn't to me.
It depends on how you're positioned in the market. If you're about to retire and you have a finite amount of money, or you're collecting a pension, and all of a sudden inflation takes off, you are screwed because you cannot afford in 5 years what you could afford today. So then that's why you see a lot of retirees go back to work, right? Mm-hmm. If you're us and you own a lot of assets, you get wealthy on paper. But your money in those assets is still worth what they were worth prior to the inflation, because the buying power of that asset is still exactly the same.
It's the value of actual dollars versus assets, basically, right? So yeah, it depends on how you're positioned. And so if you look at overall interest rates going up now, has inflation been, it's obviously inflation has increased, but it hasn't increased to a level that is, I wouldn't say overly concerning, but I think that the increasing of interest rates is important so that the Fed has flexibility in monetary policy, because should they need to stimulate the economy again, when that happens in the next cycle, one of their main tools is lowering interest rates, right? Mm-hmm. You can't lower interest rates when they're at zero.
No.
So,
but Japan went into negative interest rates. So what does that do to an economy?
Not an expert there. Next question. Japan's had a lot of problems.
Yeah, well, that's exactly right. They've been a stagnant economy since they went into negative interest rates way back when. Right. They haven't grown as a result.
Got a lot of issues too. They have an aging population. There are, from what I understand, and I don't have the specific data on this, but there are a lot more elderly than there are young people.
Really?
Yeah.
Like they're not procreating.
The population is weighted to the older.
Well, the United States has an aging population too, right? I mean, baby boomers getting older.
Yeah, but
did the baby boomers have more kids?
Well, the baby boomers were the more kids.
But not to the level that you're seeing in Japan.
It's not as disproportionate.
Yeah. There's the majority of the population is on the older end of the spectrum versus younger end of the spectrum, which creates to stimulate the economy. You need new people coming to the workforce, creating jobs, starting businesses, employing people, and they don't have that.
So we're having an interesting conversation. I'm trying to figure out. It brings up a good point though. This is all so complex, and there's so many factors that go into it. And for every point, there's a counterpoint, and for every point, there's then a question. Right? You can dive deeper. So for your average person living on Long Island, I guess what I'm trying to get at is how can we put this in simple terms for them, where they can kind of wrap their head around. And then Ron, you might have explained it the best, just in terms of how the economy functions with credit and interest rates and why that happens. But how can we enable them to wrap their head around kind of what's happening and why it's happening, and I guess the general principles behind it all? I mean, is it as simple as interest rates and money supply? Is it more of just sentiment?
I think right now, politically, I think because Donald Trump is a wild card. Mm-hmm. I'm not saying I support him or don't support him. I'm in a neutral position there, but I mean, he changed the tax plan that hasn't been changed since 1986. What kind of implications is that going to have on the economy? A lot of people think that gave the economy a short-term boost, correct?
I would say it's possible. A lot of people think that. I think that creating a more pro-business environment is good for the economy, right? So the over-regulation, in my opinion, stifles industry. Right?
Agreed.
So if you can simplify taxes and give businesses more clarity in terms of how they're going to be operating, what they're going to be responsible for, what the costs of employing additional people are going to be, it creates an easier environment for them. And when you have a more pro-business environment, things should get better. They'll be employing more people. Their revenue grows.
So it's interesting he's saying that, because now we're heading into the first tax season where we're actually realizing Donald Trump's tax plan. There's a good chance that because I don't think people have their head wrapped around this yet. Most people don't. I know our accountant doesn't, unless he's a bad accountant, but I don't think he is. Been around a long time. Long story short, once businesses wrap their head around the new tax plan, is it possible that we get another uptick in the economy and it takes off? Because, I mean, there's a lot of benefits on that side.
I think again, Are we talking about the economy or the market? Because if you take a look
Business.
at so
market will take off, right? If businesses are doing better.
Well, it has up until 2-3 months ago.
If businesses,
That was all sentiment, though, because it hasn't been realized yet. Now it's going to be realized.
but you also have to remember that the market's a forward-looking indicator, right? The market's not necessarily trading on the things that happened last quarter and the quarter before. The market's trading based upon anticipation of what's going to happen next quarter and the quarter after that.
Right.
What the future holds. So with that in mind, that's why I think, after this tax plan came into place, you saw the market rally.
Yep.
In anticipation of the benefits of this tax plan. So that's all, I think that's accounted for in the market.
Right.
That's why we saw the move that we saw. Now the question is going to be what happens from here. And because of the uncertainty that exists, that's why you're seeing the volatility.
Gotcha.
Because it's not the market's not looking
How's
back.
monetary policy going to interact with the new tax plan and corporations?
It's figuring out what's going to happen in the future. And that's why
That's
the stock market's tricky, right?
Yes,
because
yes.
you're trying to figure out what's going to happen tomorrow. You're trying to predict, right?
And no one has a crystal ball.
Right. And when there's uncertainty, you see volatility.
So no one knows. We're right back to square one.
Listen,
Well, here's
if
what
any
we
of
know,
us
right?
knew, we'd be filthy rich, right?
Yeah.
I mean, if you could predict that.
Here's what we know. We know that the economy operates in cycles, right? And
What are those cycles? Is there every 5 to 7 years, 7 to 10 years? Are there timelines on those, or not really?
so there's typical timelines, but they could change based upon what's going on, right? So
historically,
they
what are
say
those
historically
timelines?
they say every 7 years. We've been going longer than that now, and the cycle is expansion, recession, and then re-expand. It's back and forth.
So
It's back and,
expansion, contraction,
Right.
contraction. Yeah.
Yeah. And most
that's
most
why I think that you shouldn't. If you look at the big, I'm sorry. No, if you look at the big picture and you just understand that there's constantly going to be expansion and contraction, what you need to do is look at your own situation, because everyone's situation is different, right? If you're a young guy or a girl and you are young, earning money, going to be in the workforce for a long time, don't get overly concerned with those expansions and contractions, right? Because
and don't buy into the contraction, right? And sell into a rising market. A lot of people do that when they're young, and then that hinders the accumulation of wealth over time for individuals, right?
Yes, no, it depends on what, are you talking about specific individual equities? Are you talking about, owning the overall market via ETFs and mutual funds?
What
and
I'm
things
saying
like that?
is people panic and they sell.
Yeah.
At a time like now. And I think that's a bad move, especially if you're young, like you said, and you've got a long time to go. You could kind of just leave it and forget about it. Correct?
If you've got a long time to go, historically.
The historically, the expansion always outperforms the contraction over the long term.
Yeah.
So if you have a long time to go, then don't worry about now, because if you look at where we were in the 1900 versus 2000, obviously the market's considerably higher. And if you look at 2000 versus 2050, the assumption is that based on history, the market will be considerably higher over the long term.
Right. Well, it goes back to also to what we were talking about before, which is inflation, right? And inflation over time devalues the dollar versus assets.
Pushing the markets up.
Owning shares in companies in the market or what have you, those are assets. So there could be times when that asset class is going down, right, relative to other assets, or maybe all asset classes are going down as interest rates are rising, all these other things are happening. But over the long run, when you look at asset values versus the dollar, assets appreciate versus
Right.
the dollar in
Right.
the long run. Now, if you're someone who is retired or looking at retiring, you have to be a lot more defensive and cognizant of potential downturns.
Right.
And volatility.
Right. Interesting. So in relation to what you do for a living then, with all these companies that are still trying to bring drugs to market and companies in general that are still trying to come to market, is this with the stock market going down, when people buy into these companies, can they buy in cheaper now? Do the valuations go down? How does all that work?
Well, obviously, if you take a look at the market, over the past few months, asset prices have, the stock market have come down. So yeah, you have the opportunity to purchase those assets at a relatively lower value than where they were several months ago. The question is, will you get them even cheaper in a few months from now? And that's why, now you're talking about, trading. Are you a trader or are you an investor, right? Yeah. And so I'm not a trader, well,
you're an all-weather guy?
I like the all-weather.
Yes.
But, what I do specifically is, we're funding healthcare companies that are early stage. Many of them are still private. They're not even publicly traded. They are companies that are looking to bring new therapies and treatments to market, and these are long-term investments. These are not short-term. They're long-term, and you're looking for the ability to create value via data and progression of these assets through the clinical process. It is extremely high risky, and it is meant to be a small portion of someone's investable assets, right? This is not capital that's needed anytime soon.
So these are high net worth individuals that you're going to?
Yes, ultra high net worth individuals who have an appetite for higher risk asset classes with the expectation of higher return. So, it's essentially venture capital, right? And in venture capital, you don't always have success. Right. So that's why it's important to be involved in several companies over time. And some of them some don't. Some of them may not pan out. Some of them may break even, and you're hoping to have some that do exceptionally well that make up for the others, and that's how you see that outsized.
So how do you find your clients then? Normal Joe, walk in off the street, goes to work for you. What's his job look like? How do you I mean, in any business, right? It starts off with you have a product or you have something to sell, and then you have to go out and you gotta lead generate. Mm-hmm. You got to find out who your customers are going to be. So in your world of going out into this quote unquote venture capital space and trying to find ultra high net worth individuals, what's the job for a new guy off the street look like?
A lot of Google.
Which is good.
And that's what's great about technology. We talk about how technology affects various industries. Via the internet, you have the ability to find individuals, funds, family offices, and things of that nature who invest in that specific asset class just by going online and
doing your research. See, a lot of our stuff comes offline too. I mean, I honestly don't know what people did prior to computers.
I couldn't imagine.
It was exhausting. You had to go meet everyone in the world.
They talk to other people.
Exactly.
You guys remember too? I was thinking the other day is before we had GPS on our phones and in our cars built in. I remember printing out MapQuest instructions.
Yes.
And thinking that was really high tech because I didn't have to look at a map ananymore.
Oh yeah.
Yeah.
I printed out MapQuest instructions to get to Montauk once. It's one street.
I remember on Christmas, my dad gave me a set of maps, like keeping my car.
Oh yeah.
And maps I could keep in my car.
Yep. And then the Garmin came along, and then now it's in every single car, and now it's on your phone. So
on the flip side, how do you pick the companies that you're going to back or get on? Because you're not a doctor, you're not a surgeon, you're not a chemist, you're not a biologist, right? Like you don't know what's going to work and what's not going to work in terms of healthcare. So do you have to know the science? Do you more evaluate the actual company and the people that are behind it? What do you look at? How do you choose?
That's a fantastic question. So you're right. I'm a finance guy. The guys that I work with are finance guys. We know enough to be dangerous at best, in terms of science and medicine, biology, what have you. And that comes from just learning a lot about the companies that we research. But we rely on, luckily, people who are a lot smarter than us to vet the sciences and technology. So essentially, we've built this network of individuals who are mainly former heads of global R&D at big, well-known healthcare, pharmaceutical, biotechnology companies, and we send the opportunities to them to vet and take a look at the data. And so, if it passes muster with them, and we like the opportunity, then we'll structure a round of finance for them.
That's interesting. Cool. It's similar to real estate in a lot of ways, because the real estate market is complex. There's different pockets. in our market alone, you have New York City, Long Island, the Hamptons, the North Shore, the South Shore, the boroughs. There's different pockets. There's different price ranges in all those pockets, and there's so many different variables that lead to exactly what's going on. So you have to really build a team, because you shouldn't expect to be an expert in all of it. You can't be an expert in all of it, and you're dealing with investments. For most people, we say this all the time. A property is their highest, their biggest asset. Or one of their biggest assets. So, when putting your money into an asset, that's going to be your biggest asset for most people. Why would you not have a team around you of professionals that can help you, inform you, help make you knowledgeable, so you're making the best decision possible? So it's similar in a lot of ways. Just build a team, inform yourself, be knowledgeable, and then you make the best decision possible.
People are just so important. Having the right people, whether it's a real estate team, whether it's a healthcare company, whether it's a gas station, you got to have good people. Every business is a people business, is what I always say. And when you build a great team, it doesn't guarantee success, right? But in my opinion, it greatly increases the odds of success, because you want people who have been there and done that. They've seen the good, the bad, the ugly, and they know how to navigate tough situations, because in business, tough situations occur.
Or playing to people's strengths.
Right.
Someone might be good at building systems. Another person might be good at... This is a
Dalio thing coming up.
Well, no, it's not. But someone might be good at building systems. Someone might be good at researching what's the latest and greatest way to generate leads or customers or whatever. And then there's a sales side, right? So for us, at least, there's two people that are building out all the systems and generating everything, and then there's a sales force underneath that's chasing those opportunities that we're providing for them by creating all those systems and spending all this time, creating a podcast and launching websites and the whole deal. So yeah, it's interesting. Every business, I feel like, when you break it down to the fundamentals of it, it's all the same.
To an extent, yeah. I agree.
Yeah, you guys are the sales force, right? Or you run the sales force, and that sales force is their job is to go get revenue. And you have the people on the other side that are the quote unquote geeks who know everything about healthcare and where they're bringing it and what's good and what we should tap our resources into and go work. And these companies are the ones we should go work with. And And together, everything, it's a business.
Well, you know what you're an expert in, which, like you said, is the finance. You can be dangerous with the other stuff, but you leave that you leave that to the experts in those fields. Right. And that's what any business is knowing what you're good at and sticking to what you're good at, and then the pieces that you're not good at is finding someone who's good at that and plugging it in.
Delegate.
Right? Yeah.
I agree. It's funny you talk about. I don't know why this popped into my head talking about sales. Can we talk about car dealers for a minute?
Shoot. What do you got about car dealers?
They are the worst.
Well, we have a friend whose brother runs a car dealer, and the people at the top of those car dealers, they know what they're doing to a certain degree because they make a lot of money.
I'm talking about the sales guys. Here's my issue. Okay. If you're a car salesman, you have someone coming in to the dealership.
They're interested to a certain degree.
They want to get a car, right? How do you still manage to blow that?
I don't know, because I got to be honest with you. In any walk of sales I've ever done in my life, no one's ever come to me.
You have to go out and get it.
Well, I'll defend the car dealer, right?
Okay, the car salesman.
Yeah, the car salesman.
Okay.
Right? We sell real estate. We do open houses. Someone goes into an open house, they're probably interested in buying a house. I mean, there are people, I will say, in the summer and the spring, if it's a really nice house, maybe they're window shopping. But that's really, usually if you go into an open house, in some way or another, you're interested, you're thinking about buying a house. You're not just like, hey, let's go look at open houses today. But you can't close. If 10 people come in, it's not like, you're going to close you're guaranteed that you're going to close one of them to buy the house. So, why should a car salesman be expected to, if 10 people come in that day, they're interested in buying a car, why should he be expected to close that deal?
I'm not saying that their close rate should be 100%. What I'm saying is, I'll give you an example. I've purchased and leased many cars in my life. I like leasing because I like to just, not have to worry about selling it. Turn it in, get a new one. It's always in warranty.
Yep.
It's always got its maintenance schedule, and you go on to the next one. Plus, it's a depreciating asset, so I don't want to buy it.
And tax deductible
for you, maybe. So here's my thing. My process is, I go to the dealer. I say, here's the car I'm interested in. I'm going to lease it. Give me the price of the car, the residual, the money factor, and that's what we're going to talk about. Okay? Whatever incentive.
Too much.
Guy goes, all right, but what's your monthly? What could you do on a month? Don't worry about that. We're going to talk about the price of the car, the residual,
and the money
factor. And mileage and those things, right? All right, let me talk to my finance guy. I got to talk to my finance manager, back and forth. And it's just this runner. Just give me the price of the car.
So I agree with you there. I've sat in a chair for 45 minutes waiting for a car for a car salesman to get back to me. But I think what you're assuming is that everyone who walks into a car dealership knows exactly what they want to buy.
I'm not making that assumption, but if someone just wants transparency, listen, you know what I appreciate? Transparency, right? Here's what I want. Just give me what I want.
Well, they don't give it to you because they know that if they give it to you, they're gonna make the least amount of money possible.
No, because I understand. Listen, what's a good deal? A good deal is a deal where all parties walk away happy, satisfied, right?
Doesn't always happen.
Or you could say unhappy.
A good deal?
Well, for
a fair deal.
Again, my opinion. I think a good deal is when both parties walk away happy from the transaction.
Let's not change the subject. Is it if all parties walk away happy versus all parties walk away unhappy? Is one deal a better deal than the other?
The deal's good for somebody. If the consumer walks away happy and the dealer walks away from the deal unhappy, the consumer wins.
Well, okay.
A good deal is the art of selling would be the dealer sending the consumer away after the purchase happy, but the dealer really made money in that deal.
So both parties walk away happy.
Yes.
There you go. It's a good deal. So, but my point is that I understand the dealer has to make money. Okay. Not opposed to that.
Right.
What I want is transparency. I want to know, okay, here's the price of the car. This is the money factor, the terms. I understand it. I'm content. I think I got a good deal. He made money. Great. Send me a Christmas card. I'll see you later.
Send me a Christmas card.
But that I just, I'll give you a real world example. So a colleague of mine, she was looking to lease a vehicle. She showed me the vehicle. She told me what she was quoted. I looked at the number. I don't know. Doesn't seem like a great deal, really. Can you talk to the guy? Sure. So I call the guy up. Hey, trying to, she's interested in the car, trying to figure out, kind of how these numbers work out. What's the price of the car, the money factor, and I get the terms and I calculate the lease payment, and it's like $65 a month less than what he was quoting her. So I told him, I said, I don't understand where you're getting this monthly from, because based on the numbers that you gave me, the lease should be X.
Right.
He's like, I don't know how you're calculating that, but I'm not going to say the name of the company. We both own one. So, but it was that company. It was a different dealership. He goes, no, listen, the company pays millions of dollars for this software, and this calculates everything for us. I said, you don't need to invest millions of dollars to calculate a lease payment. This is how it works. Do you know how to calculate a lease? Well, I've never done it by hand.
No, well, most haven't.
But you should know. How do you sell something if you don't know how it works? You should be educated.
Most people don't. Most people have no idea.
That's a bad salesperson.
Yeah.
You have to know what you're doing.
Yeah. Well, why do you think we dig into all this monetary policy stuff? We want to understand money. Then we want to understand what's happening in markets, right? Like how does somebody wanting to open up a train station in a new neighborhood or renovate a train station in a neighborhood and make it a main hub, how does that affect the neighborhood around it, right? Like there are all these things that I'm constantly reading. I'm constantly trying to figure out what's next, what's coming, what's happening in this market and that market, so I could speak to it and understand it and know why. If we have someone who's trying to buy or sell in that area, why they're happy with a price or unhappy with a price or whatever. And I think as a professional, if you're going to try to be the best at your trade, you have to be the guy who's living it. It's a lifestyle. It can't be something that you haphazardly do here and there and kind of pay attention and then disappear for 3 months and come back and think that the laws are all still the same, and they're not. I mean, look, 3 months ago we were in a different housing market than we are today. Mm-hmm. If we can't relay that to our team, well, then our team is going to get on the phones with sophisticated people, especially at the higher price points where they understand these things, and they're gonna look like idiots and portray our business poorly. So, I think you have to live it.
I think that's why it's so important to be good. I think at anything you have to have a passion for. Yes, you have to have that obsession. You have to have that very healthy obsession. I'm always thinking about my work. I'm always thinking about it, and
you're submerged in it.
I love it.
Yeah.
But I want to know everything I can know. Yeah. And I'm never going to know everything about it. That's the thing. So you're constantly, and that's one of those things that challenges you, and you want to learn more, and you want to know what's changing in the market, what's changing in terms of other companies in the space, and you got to have that healthy obsession. I was at the office the other day. This past week, I've been at the office till like 10:30 p.m. each night, and 10:30 runs around, and I'm thinking, I want to keep going. Yeah. I got a dog at home.
Not enough time in a day.
I had to go home and feed the dog.
Not enough time in a day. Yeah. But that's good. That means you're in a walk of life that you're interested in and you want to do better at every day.
And there's always something to do. There's always more, you know?
Well, you just answered the car salesman question, right? That's why.
Back to the car salesman.
Well, right, that's what we're talking about. That's why. Like, who loves being a car salesman, right? That's why, because they probably sell plenty of cars, and they get by doing what they do. So they don't love it so much. They're going to go the extra mile to appease people like you.
That's true.
Who are nuts, you know?
Maybe it's not a career for
you know,
them.
so it's like listen, buddy,
about.
the $1 million system calculates it. What more do you want from me, right? I'll go to the next person.
I'm trying to go get lunch
to sell a car, you know. So it's
there are some out there though that are great at what they do. I remember the first car I leased. This guy Bob at Acura. Bob at Acura. He was awesome. He was awesome. Straightforward, transparent. And that's all you're looking for. Just straightforward, transparent. Tell me how it is.
Yeah.
You know, and he was excellent and he was so helpful. But, you know, the guy was older. He had been there for a while. You could tell, like, that was his career.
Yeah.
That's what he had his plaques and his awards on the wall, and he had pride in what he did.
Well, that's the guy that's living it, right? That's the guy that's got it figured out. He knows how to interact with people.
I envy those people. The people that you could do anything and be great at it. You could be famous for doing anything. You could become a millionaire doing anything if you genuinely love it and enjoy it and have a passion for it, right?
Yeah.
I mean,
but if you're gonna do anything, do it well. You know, even if it's not your career, if it's something that you're doing for now to get you somewhere in the future, because everyone's had jobs that they're doing for now. You know, when we were in college, when you're in high school, maybe some people right after college don't get into the career that they want, but they're doing something for that moment to get them there. Whatever it is, just do it well. Have pride in what you do.
Well, I think there's a lot of people that let fear steer their life, right? They let fear steer their life, and there's actually a quote, and it's by someone who you would never think would say something like this, but it's Jim Carrey, and I have it hanging on my desk. It's one of my favorite quotes, and it says something.
Somebody stop me.
No. It's he talks about his father, and he says, "My father would have been a great comedian, but he chose
safe.
He chose the safe option, and he became an accountant." And he said, "My father was fired from that job, and our family had to live." They struggled to live. They struggled to live, right? And he struggled to provide, he said. But he learned a lot of lessons from his father, but probably the most important is that you could fail at what you don't love. So you might as well do what you like.
Yeah, no, that's great. And I've read that before.
And part of it is so many people act out of fear disguised as practicality. So you have that friend who says, "Oh man, I really want to open this, or I really want to do that with my life." And then you're like, "Well, what steps are you taking to do that?" And he goes, "Well, I don't have time." Well, you sit on your couch, you watch the Mets, you know more about the Mets than you do what you want to do in this next venture. And then you say, "Okay, well, just leave your job then. You don't have a wife, you don't have kids, you don't have that much, and then the excuses start to come out." And the reality of the situation is that what we see in the end with most of these successful people who are happy or look happy, the people who are self-made, there's a journey to get there, and what we're seeing is the end result. You're seeing past the 10,000 hours, right? They've put 10,000 hours into that, and you're seeing the fruits of labor that happened over the course of years and time, and we live in a world today where with Instagram and Facebook.
I was going to ask you if you think technology has 100% enhanced that.
100%, because
it's the instant gratification.
Instant gratification.
Yeah.
I mean, you don't need to go to a bar, order a drink, and strike up a conversation with a girl and invest 2 hours into a conversation to get a number anymore. You could just swipe left, right?
Yep.
I mean, think about it. So this instant gratification, and then people carry that into their personal life.
Forget about that. Remember libraries?
Remember what was that?
They go through
the car drawers.
Yep,
I mean,
I gotta look up A37296.
The Dewey Decimal System.
Yeah, I mean, look, we live in a weird world today. It's changed. A lot of people just don't understand that you're gonna, for lack of a better word, you're gonna have to eat shit for a long time in order to see true, real success. If you're a real self-made, beginning from zero with no help from anybody in whatever trade it is that you're trying to do or profession in life, that you have to pay your dues. And a lot of people don't want to do that.
Well, the other thing, to your point, Sean, if you said if you're going to do it, if you're going to do something, just why not be great at it? I think what gets in a lot of people's way there is pride, right? A lot of people, they have too much pride, and they look down upon what they're doing. Whereas if they would just let their ego go, let their pride go.
How about pride disguised as fear?
Yeah,
I mean, fear disguised as pride. Oh, I'm too good for that. I can't do that. I can't get on the phone and pound the phone for the next 3 hours and make 200 phone calls to strangers. I fear the rejection.
Yeah, there's both. You could be afraid.
It all ties back to fear.
Because if I think about pride, I mean, I would say that's why I want to do whatever I do well. When I was in junior high school, I started bussing tables. I wanted to be the best bus boy in that place, And
then there's other people, though, that would be bussing tables and be like, oh my God, this is so embarrassing. I hope no one sees me bussing a table. And they're trying to act cool while doing it, so they don't get embarrassed,
and they're fearing being judged by their peers.
What do you think causes that? Is that something
fear?
Is it? But what is that?
I could spin any.
Limiting factor, but we all have fears, right? We all have fears.
And fear doesn't have to be a bad thing. It can be a good thing.
Sometimes it's fear of success. Sometimes, if you grow up in a situation where your parents don't have a lot of money and they have these, so people fall into these cycles, these patterns, right? I mean, I've met a lot of people in my time who they're in these cycles of poverty, or not poverty, but not doing well, and they never get out of them. And then everybody in that situation, the family members, maybe cousins, whatever the case is, misery loves company, so everybody starts falling on that same page, right? That's why they say if you want to be successful, you have to remove certain people from your life completely, right? And you have to surround yourself with people that are better than you. It's kind of like growing up, right? Wrestling. They pulled me out of the 8th grade room. They threw me into the varsity room because
bragger.
Well, I was a highly talented individual, but why? Because had I stayed in a junior varsity room, I would have played down to that level rather than getting thrown to the wolves with people who were 5 years older than me. That's how you get better. That's how you sharpen that sword.
I think there's a fine line there too, though. I mean, you never want to forget where you came from, and you always want to be humble and respect your roots. So
yes, unless because there are situations like this. It might not be your situation, but there are people in the world who actually. All right, for instance, I have kids. I want my kids to do better than me. But there are fathers out there that tell their children that degrade them for doing better. And that's the cycle that I'm talking about.
Well, that's a toxic situation you're talking about.
Yeah, that's probably
that's more prominent. That is more prominent than you know.
Really?
More prominent than you know. Yes.
But I mean, I don't have kids, so I can't speak to it from a firsthand, basis. But I would imagine that one of the things that's great about having children is that it's like a piece of you that continues after you're gone. And don't you want that piece of you to be greater than you?
100%. But there are people who are jealous of their kids.
That's a whole different situation. Then you need to remove certain people from your life.
Thing.
to blame, to be saying these people are holding me back, I think that's bullshit. That's a cop out. No one's holding you back. You're holding yourself back. You know what I mean? You could hang out with your friends and still be successful. It's not like they're holding you back. I mean, if you have a parent who's been abusing you since you were a child, that's a different story. But if you have a group of friends and you say, listen, I can either step away from that group of friends and start hanging out with these guys because then I'll be able to be successful. I mean, I think that's a cop out. Maybe it goes back to fear where you don't want to all of a sudden drive a better car than your friends.
Well, that's what happens. That's what happens. So, okay.
That's your own problem. That's not, you don't need to remove yourself from that group of people. You just need to get over it.
It gets weird.
It doesn't have to.
It does. I
agree more with Mike on that one. I just, and also too, I think one of the big things is being able to look at yourself objectively, right? Being able to say, hey, this is what I do well, and here's what I'm terrible at, because we all have strengths and weaknesses, right? Being able to look at your weaknesses objectively and address them. You're not going to be great at everything, so you triple down on your strengths, and then you
build a team around yourself.
But you also address what you're not good at and look at yourself objectively. And how everyone's told themselves a line of BS, and you always can look back at it, in hindsight and be like, oh, what was I? That was just nonsense I was feeding myself. But that's why it's important to have that objective stance. Look at things for what they are without that contamination in there.
I have a hard time doing that. I know. Nothing. But let me ask you this. Do you think David Goggins hangs out with his loser friends from before he lost 100 pounds and became who he is today?
But that's
no chance.
No, but that is.
I don't know how anyone could hang out with that guy.
But that's,
let alone the people that were helping him stay in that pattern.
But that's why you have to look at your situation objectively. And when I say that, so it's a combination, I think, of what both of you are saying. Mike's saying that you're holding yourself back, and you're saying that you have to surround yourself by better people, but maybe you're holding yourself back by hanging around with shitty people.
Well, yeah, if you're in a toxic situation, then you need to remove yourself from that situation, whatever it is. But if it's just an excuse, it could be both. It could be both. You could be in a toxic situation that you have to remove yourself from, because if you stay in that situation, you're never going to progress in life. Or it could be that you're just blaming your situation for your failures, but it really has nothing to do with your situation. It has to do with you not overcoming your failures.
But there are things that help you stay in that pattern. The familiar, comfortable things.
Bad habits.
Right. And part of those habits are the people that help you stay in that habit, or the people that promote that habit. So how many people do you know that, I know two people. I'm not going to name names, but I know these people. They're real people. One of them,
say it.
One of them has a union job, makes a union wage. And by the way, good for him, fabulous life, right? But this other person, the brother, wanted more for himself. So he went out and he got a risky job, but with high risk comes high reward. And for the longest time, the brother, the younger one, was being told by the older brother, you should just go get that job, that I'll get you into the union, life will be easy. And again, good for him. That's a good life too. But this person who wanted more was catching flack from the older brother, who was basically demeaning him and talking down to him to a certain degree because he wanted more and he wanted to take that shot. Probably because that older brother feels better that the younger brother stays in their world. But now when that younger brother turns around and he's got more, because a lot of people compare, right? And again, nothing wrong with the union job. That's good. If that's what you want with your life, God bless you.
Some of them are very tough.
Some of them are very hard. Okay? But because this other person wanted more, the brother and him are at odds.
But I think that's why it's so important to have that objective view on reality and know that every person is different. There are some people who perhaps they better thrive and are happier in that security in knowing that, hey, this is my monthly wage, and this is how much it's going to grow, and here's the pension that I'm at, and there's nothing wrong with
nothing
that.
At all.
If that works for you, that's great. But I think that people have different personality types, obviously, and there are some personalities that wouldn't feel happy with that. I don't think the three of us would feel satisfied in that position. Maybe there are other people, by the way, who do the union thing, but they're doing that to earn a certain amount, and that's a means to something else. Maybe they're going to take that, save up, and then start their own business doing something else, and that's great too. But ultimately, you have to find out your personality type and feed it.
Right.
There are some personalities that would be miserable in the union position, and there are other personalities that would be miserable in the entrepreneurial position. And you have to do what feeds you. You have to do what.
And by the way, I envy people who can go home and be home.
Well, I was gonna say this in the example you gave. I think there's two things. One is, I mean, the extreme. First is, where the older brother is holding the younger brother back or whatever, giving him shit for wanting quote unquote more. Removing him from your life would be probably a drastic option. You could just have a conversation with him, right?
Could.
Like, hey,
you could.
But the other thing is what do you mean by more? And that's where I agree with you, Sean. Is you have to look at yourself and say, what's important to me. What if by more you want more money, then yeah, probably at a union job you're capped it's capped at some point. If more you want more time with your family or more stability, then that's the right. It just depends on who you are and what you want from life. And you have to know what's important to you, and then you pick whatever avenue makes sense. I don't think there's no right or no wrong. You have to know yourself, know what you want, and that's it. I
think the only wrong is investing and focusing on something that doesn't satisfy you. You have to, and
living a life of regretting not doing something, that's a big one.
We only have so many minutes here, right? And none of us are making it out alive.
No.
And you don't want to look back and say, well, I really wish I did this or I wish I did that. So you want to do your best to figure it out. Hey, what do I want? And that, again, be objective and say, what do I really want? Okay, I have to figure out now how I can start doing that, because it's better, going back to the Jim Carrey thing, it's better to fail at that than fail at mediocrity.
It goes back to when I'm 80 years old, if I look back, am I not going to be happy that I didn't at least try?
Yeah.
Whatever that is.
If you're fulfilled by what you do, then you're doing the right thing. And listen, no one loves their job 100% of the time, and no job is great 100% of the time. Every job has its aspects that suck and are tedious, and it's like, man, I don't love this part of the job. But if you're getting fulfillment out of what you do, then you're doing the right thing. No matter what that means. That's what it comes down to, I think.
Agree.
I think there's also, I think human nature is that we need to feel that we're being challenged and getting better at something. Yeah, you have to grow. And I think there are, chemicals that get released in the brain that make you feel good when you feel that you are growing and you're getting better at something, and
your mind's working.
Yeah. So, I think no matter what you do, maybe you're doing something that doesn't fulfill that, but for a career, but you have to find something else that does.
Yeah, you could coach, you could read, you could take up a hobby, you can give to charities. It doesn't have to be your job. Your job doesn't need to fulfill every human need. But to your point, there are certain human needs that need to be fulfilled, and they should be getting fulfilled one way or another.
Right.
And that's what I mean by fulfillment. If you have fulfillment in your life, then you're doing the right thing, whether that be job or hobby or charity or coaching or reading, whatever.
100%.
You're doing the right thing, and you could teach a lot of people something probably.
Yeah,
I know a guy through the fire department who he's in a union, and one of the guys in his union does his union work, right? And when he's done with his union work,
the fire department fulfills him.
No, it's not the fire department. This guy's not in the fire department. This other guy, so it's a friend of a friend. But he tells me about him. He's like, this guy travels the world. He does the kite surfing, and he does all this other, and that's his passion. His union job allows him the income to do it and the flexibility to do it. So that's what feeds him.
Right.
He'll travel the world, see things that he wants to see, experience things that he wants to experience, and then, he'll get better and better at kite surfing or windsurfing or whatever it is, and that feeds that need for growth. But the dangerous thing, I think, is finding yourself in a situation where you're not doing anything that feeds that growth, because you're then
probably not happy.
I don't see how you could be.
You shouldn't follow the life that someone else has mapped out for you. You should follow what you and your heart and your soul want to do, period. And that means listening to yourself and following that little voice in your head that tells you this isn't right. You gotta get out and go do something different, right? I mean, follow your passion, follow whatever it is that you're interested in. Otherwise, you're just going to live a life of regret in the end.
I think going back to what you said too about surrounding yourself with the right people, surrounding yourself with people who have that
same
mindset.
Drive.
And again, it doesn't have to be the exact same passion, but surround yourself with people who are passionate about something, who are going out there and chasing it.
Yeah, and you could share ideas. Hey, this is working for me here. Maybe this will help you over there. Right? I mean, that's why, I'm constantly screaming about things. I'm trying to get people.
That's because you're Italian.
Yeah, like you came in here today. I'm like, man, I could show Shaw some stuff that we do to lead gen that might help him in his world and all that good stuff. Right? So. Yeah, I agree. Well, guys, we've done an hour and 45 minutes.
Wow. Didn't feel like it.
Doesn't feel like it, right?
Yeah.
Covered it all. Ketogenic diets.
Yeah, finance, where we are in the economy, life.
I liked it. This was fun.
This is a lot of fun. You're going to be back.
Yeah.
Why don't you give yourself a little
lunch and do another one?
No. I have a wife and kids.
All right.
You give yourself a plug. Tell the world about you.
Yeah, I don't know.
Edit that one out.
I may have to edit that one out because honestly, there's
not much we could do. Okay, yeah. I'll edit that out. All right, guys. This is the Pesce Lanzillotta Team Podcast. Mike Pesce, Ron Lanzillotta, and Sean Ash signing off. If you want to give us a call and discuss some real estate matters, our number is 516-888-9711. Our email is info@pl-team.com, and we are out.